Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the rounding top pattern. And you can see some examples, some images here, just a quick AI overview. You can pause and, of course, read this on your own leisure. Here's an image that I've selected. Now, I've actually covered in a prior video both rounded top and rounded bottom, and I want to talk specifically about the rounded top. Now, if you think about it, the rounded top is price structure that comes after an advance. The exception to this, of course, would be something like a cup and handle continuation. When you form a bottom, you do some type of a rounding top, a minor consolidation, and a continuation, obviously the opposite of what you think of as a cup and handle continuation. Now, for the most part, in this example, we're going to look at the rounding top as a reversal. And it's got that rounded shape. You have the advance and some type of a rounded shape. It shows momentum slowing down, the bear momentum slowing down, flattening, and then coming back down and reaching a trough or a low. Very roughly a low somewhere around here. And again, with any pattern, of course, you're going to take the breakout. You're going to trade on the breakout, the loss of the pattern. We're not going to mess around in the middle of the channel. We're not going to anticipate in here that it's breaking down. We're going to observe that the prior bear trend has slowed down and momentum may be shifting, but we're going to wait, of course, for confirmation. Now, for volume, in theory, if we get a breakdown, you'd like to see advanced volume on the break of the trough. You'd also like to see volume increasing as the price is approaching that breakdown level, showing that there's more distribution. In this case, it would actually be with the trend. Here, if there was more red volume, it would be counter trend volume. But as the minor trend, it becomes the minor trend as it's starting to head down, and you'll start to see volume in the favor of the trend, more red volume, preparing for a potential breakdown. In addition, you don't want to get too fussed or too caught up in exactly the structure here. It doesn't have to price doesn't have to follow this line. You can have a series of bounces like this, something like you can do all sorts of things generally like this, such that the price structure can generally be described as a rounding top. You even have something like this where you have an advance into your rounding top, and then you have like something like that. You can add them, and then even an eve forming again a rounded top. It's to generally describe the price structure. Now, with any pattern, again, we're back to the trough or the low. You're really only going to trigger on a loss of the low, and that's going to depend on how well defined that low is, how you're structuring your risk. Not all trade setups, not all price structure is created equally. But with the rounding top, you want to observe the structure. Regardless of exactly how it forms, the spikes, the peaks within it, you still have the general rounding shape. And then you have the low or the trough, which is where you're going to trigger from. This shows a measured move, which shows the height of the consolidation pattern extended down from the breakdown point. This is a rounding top. And this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you, folks. I'll talk to you soon. Big Chads out.